Welcome everyone to this short video which provides an update on funding within the UK therapeutic sector. My name is Tim Newton. I'm a Senior Market Analyst at Medicines Discovery Catapult. In February, as part of the Connect series webinars, I presented data on the financing of UK-based therapeutic SMEs, small, medium-sized enterprises, from January 2020 to June 2023. The financing activities I examined included equity, both private and public, grants and revenue. In the webinar, I showed how financing for these companies had changed over time and how different groups or segments of companies had been impacted. In this short update video, I'll focus on the change in private equity for the same cohort of companies from the end of June 2023 to the end of Q3 2024. I'm focusing on private equity for two key reasons. First, it's the lifeblood of many companies in this sector, providing a useful gauge of the sector's overall health. Second, it's a more timely indicator compared with other sources of financing data like revenue, which can lag. So here is the private equity data which I presented in the Connect series webinars earlier in the year. We had a big inflow of private equity in 2021, followed by a sharp reduction during 2022. At the time, 2023 looked like it would be a rather challenging year. This period coincided with high inflation, rising interest rates, which likely influenced market conditions. I've added here the Consumer Price Index, or CPI, in green, and the Bank of England base rate data in black. Inflation peaked in 2022 and has been falling since. So what has happened with private equity funding for this cohort of companies since then? Here's the updated private equity funding data for the second half of 2023 through to Q3 2024. Funding improved in the second half of 2023, rising to over 500 million compared with the 370 million raised in the first half. Despite this recovery, the year has still continued a downward trend from 2021, though the rate of decline was much smaller. So what happened in 2024 up until the end of Q3? From a private equity perspective, funding has improved in 2024 compared to 2023, and 2024 will be the first year of private equity funding growth since 2021, and that is a great news story. While this growth in 2024 is encouraging, it's important to consider how inflation affects the value of these investments over time. Are we seeing a real recovery in financing, or has inflation eroded some of this progress? Let's take a look. Now, the data presented so far is in nominal values. It's the raw values and represents the aggregated amount of investment into these companies each year. And it helps us understand the market conditions in any one year. But we've gone through this period of high inflation, and we all know from our personal experiences that a pound in our pocket today doesn't go as far as it did back in 2020. So on this final slide, we compare the nominal values of private equity investment with their real values, which have been adjusted for inflation using the 2020 as the baseline. So the grey bars represent the nominal values, or the actual amounts raised each year. In contrast, the dashed line shows the real values adjusted for inflation to account for the erosion of purchasing power. One could argue this gives us a clearer picture for a like-for-like comparison over years. And while 2024 funding shows an improvement in nominal terms, its real value is nearly 20% lower than the nominal figure. This highlights how rising prices have reduced the purchasing power even as nominal amounts increased. Still, the positive message remains. 2024 marks the first year of real funding growth since 2021, reflecting renewed investor confidence in the sector. By looking at both the nominal and real values, I believe we gain a more complete picture of how funding trends have evolved. Thank you for watching. If you found this update insightful, Please like, share and stay tuned for future updates.